Hey, what's up you guys? Welcome back to the channel. So today I want to talk about 5 common mistakes to avoid when refinancing your mortgage. If you're new to my channel, my name is Min. I talk about how to save money and how to build wealth. Let's get into the video. So I've been in the mortgage game for over 10 years now, ever since I bought my first house, and I've seen a lot of tactics they use to try to get people to refinance. So when rates are super low, we become super easy targets for loan officers to get easy commissions, and they'll throw everything at you to try to get you to refinance. Money's dirt cheap right now, and you're probably thinking about refinancing, but you're probably scared and don't want to make a lot of mistakes. So today I'm going to talk about 5 common mistakes to avoid when refinancing your mortgage. So these are in no particular order, but the first thing they're going to tell you is you're going to be able to skip your monthly payments. And usually during this whole process, it can take anywhere from 30 to 45 days. And so usually you can skip maybe 1 or 2 monthly payments before you actually pay your new loan. And so the lenders will tell you don't have to worry about closing costs because you're going to be saving money by not having to pay mortgages. So, that $3,500 closing cost, no worries. You're going to be skipping, $2,000 payments for 2 months. And so you can use that in your closing costs. But in reality, nothing is free. If you actually go through the refinance process, they will actually request a payoff amount from your old bank. And that payoff amount already includes all the interest up to that date that they requested. And on your new loan, let's say you refinanced in May or June, and your new mortgage isn't due until August, so you got June and July in there that you supposedly skipped. Well, all of that money is already accounted for in your closing costs. You'll actually see there's a line item called prepaid interest, and you're actually paying that already to the bank. And remember, the banks make money off interest, and so they just hid in this line item in your closing costs. So really the only thing you're skipping is the principal portion of the payment, which is your money anyways. So you might get tricked into believing that you're skipping payments, and it might even justify you doing the refinance and paying the closing costs. So just keep that in mind when the lender tells you you're skipping payments. You're only skipping the principal portion. Remember, the banks always win. The old bank wins with the payoff balance, and the new bank wins with the prepaid interest that you're paying at closing. The next thing the banks and lenders will tell you is that you're actually going to be lowering your monthly payment, right? Who doesn't need more money in their pocket every month? Let's say you're paying $2,000 a month for your mortgage and the refinance gets you down to $1,700 a month, right? That's a $300 a month savings. You can take that $300 a month you just saved by refinancing and buy that sweet new car you always wanted. I'm just kidding, don't do that. Now there's 2 reasons why your monthly payment is going to be lowered. The first is obvious, which your interest rate is going to be lower than your old loan hopefully. If not, then you shouldn't be refinancing. The second reason is because you actually extended the loan to another 30-year loan. So let's say you were in year 5 of your loan. Well, you only had 25 years left to pay off that old loan. And now all of a sudden you refinance and you have a 30-year loan again. That ultimately resets the entire schedule, taking your old loan balance and making it the new loan balance for 30 years. And so obviously that's going to lower your monthly payment as well. Now you really need to look at your numbers when you do your refinance because you don't want to lose to the banks. The banks love it when you refinance because remember, when everything gets reset, all of the payments up front are really loaded with interest. And so the banks make most of their money when you're in your first 5 or 10 years of your loan. And actually you're not really saving a whole lot of money until down the road. If you're interested in how to pay off your home faster by refinancing, check out my other video here. I talk about a strategy you can do to make sure that you don't lose to the banks and you actually come out ahead when you refinance and extend your loan. Now the next strategy I see a lot is the fact that you can actually get a free refinance. And they call this a no closing cost refinance. Now if you actually see this, make sure that it actually is a no cost. You can actually look at all the lender fees. Now there is such a thing as a no cost refinance, or at least a low cost refinance, but more often than not what these lenders are doing is they're actually taking your closing costs and tacking it onto your principal balance. This is a trick that they use to get more people eligible to refinance because they know a lot of Americans do not have a lot of funds to close, and most people don't want to spend $3,000 or $4,000 to close on a loan to save 1% in interest. So let's say you have a $200,000 mortgage that you want to refinance into a 3% loan, and let's say that 3% loan is going to cost you $3,000 to close. Instead of you wiring $3,000 to the bank, they will actually tack it on to your $200,000 loan and make your new loan $203,000. And so essentially this is a no out-of-pocket expense loan. And if you pair that with what I said earlier about having a lower monthly payment, well, most people aren't going to care and they're just going to go through with the loan. But one thing you want to keep in mind is when you refinance, you don't actually want to owe more money than you did prior to the refinance. And so in this scenario, you're actually owing another $3,000. And even worse, that $3,000 is now going to be amortized over 30 years. And so you're actually paying interest for 30 years on your closing costs. That is absurd. Now there is such a thing as a no closing cost loan, but it's going to be hard to find, and it's going to be hard to find one that's reasonable for your scenario. The lenders have a matrix that they use, and it has all the interest rates and all the points associated with them. And what you're looking for is a loan that has negative points that will offset all of the closing costs and still give you a decent rate for your refinance. So let me show you an example on the screen here on what I'm talking about. Alright guys, you can see on my screen here, I put a $300,000 property at $200,000. And you can see down here, you can always get a free loan, like I mentioned. 3.375, you can see the total cost is only negative $14. And so they're actually paying you $14 here to close. You can get 3.5 and they'll actually pay you $500 here. And so in this scenario, if you're at like 5% and you don't have a lot of money to close, then yeah, you can go and get yourself a 3.375% for free. And they're not going to increase your principal balance. Your principal balance is literally what you wrote here. And they're just telling you that it's going to cost you $14 after all of the fees. And you can see here in the loan costs, the lender is going to give you about $1,700 in credits. And you can see here, they're giving you points, and there's a discount on here for the link that I'm providing. And also they charge a $199 processing fee. So it ends up being negative $1,700. And then here you can see it's $1,500 in third-party charges. So these are the ones that I don't consider junk fees because you need to have an appraisal on your home. And sometimes if your home value is high enough, they'll actually waive the appraisal fee. And so you may actually not have to pay this $500 or $600 here. You have to run a credit report when you do a refinance. They need to know what your credit history is. And then these are just all the title charges that the title company charges. And then there's a recorder fee down here for your city. And so, you can see here there's no other junk fees. And it ends up being $14 to close on this loan. So you can see there are always free loans out there, but does it make sense for your scenario to refinance? Probably not. And so when rates are super low, you can get some super deals and you can find some really low interest rates that have really low closing costs. That's what you're after. You don't want to roll it into your principal balance thinking that it's free. The next thing you need to be aware about is making sure that you don't pay junk fees. Now you may not be able to avoid this because some banks have gotten away with it for so long now that it's kind of just built into their entire process. And what I mean is when you look at your closing statement, there's going to be line items for every single thing you were charged for. And there's going to be a whole bunch of things on there that make absolutely no sense. I'll put a screenshot here on the screen so you can see what some of the names are. But just know that these are all junk fees that all banks have. And they're not all going to be the same across banks. Some of them will have different ones, some of them will have more, some will have less. And what you need to really do is when you go shopping for a loan, you need to try to compare apples to apples and see what your final closing cost is going to be. Just remember, the more junk fees you pay, the more it's going to cost you at closing time. And if you remember what I said earlier, they may just tack it all into your principal balance. Now, if you don't want headaches, I suggest you use the lender that I use. They don't have any junk fees in there as far as I know. Everything is spelled out on their website. You actually don't even need to talk to anybody before you actually look at all of their rates and all of their fees. And you can actually use them as one of your comparisons with the other banks that you're interested in. The name of that company is Box Home Loans. I've used it for my rental, my current home, my friends and family use them, and they've all had good experience. I also am not sponsored by them. I just know that they saved me a ton of money, and I'm sure they can save you some money as well. The next mistake or strategy you should avoid is the cash out refinance. Now, the real estate market has been great. Most likely your house is appreciated in value. This might entice you to pull money out and actually use it to pay for other things. So let's say you owe $200,000 on your $300,000 house, and let's say your $300,000 house is all of a sudden worth $500,000. Well, because your home is appreciated in value, you actually have the option to do a cash out refinance. What that means is you can actually take out a loan for, let's say, $400,000 to maintain 80% loan to value. And since you only owe $200,000, the lender will cut you a check for the difference, which is $200,000. The banks are willing to do this because the value of your home is worth $500,000 and your new mortgage is only $400,000, so they're going to be making money off of you, and you're still maintaining an 80% loan to value. This means that your new refinance loan will be $400,000, which means your payment's going to be a lot higher, but they're going to cut you a check for $200,000 and you can do whatever you want with it. You can take that $200,000 and buy that new Tesla you always wanted. Oh wait, don't do that. Just note that when you pull all of that equity out through a cash out refinance, your loan balance is now $400,000 instead of $200,000. And so that payment is going to be a lot higher than what it was before. You're also going to be paying interest on that entire amount as well. So just keep that in mind. Now, cash out refinance can be a good thing if you actually have good use for that money. And the only good use I can see is if you're trying to consolidate all of your debt and you're paying a lot of credit card interest, or you have student loan debt maybe, and you want to just get rid of it all, I think that's the only logical thing I can think of. Because one, you're getting rid of high interest debt, and two, all of that interest you're paying on your mortgage now is actually a tax write-off, and so you actually have tax benefits, whereas before you actually didn't have any tax write-offs by paying credit card interest. But I will have to say that your house should never be your piggy bank. You should never rely on a cash out refinance to pay off your debt. Just remember, every time you refinance, you have to pay closing costs. And so unless you can find a no-cost loan, it's going to end up costing you a lot of money to get that money out. And also, imagine the flip side. Let's say you pulled that $200,000 out, and all of a sudden, the real estate market tanks, and your home is now worth $300,000 again. Well, you owe $400,000 on a $300,000 home. Now, let's say you lost your job and you can't afford that $400,000 mortgage. Well, now you're forced to sell it or foreclose it, and now you're gonna have to take a loss on selling that real estate property. And even worse, if you took out that $200,000 to buy more real estate, now you might have lost money on that new property as well. And so you can see here, a lot of things can go bad really quickly. And also, I know a lot of people that have a lot of money on hand, they get a little reckless with it. You know, if you had $200,000 sitting in the bank, most likely you're going to spend it on something dumb. You know, you're probably going to go on vacations, you're probably going to buy new cars. I'm not really sure there's a good reason to have all that cash in your account when you're better off just keeping the principal balance where it was and trying to pay off your mortgage. So as you can see, this cash out refinance can be a dangerous situation for a lot of people, especially people who have no control over their money or finances and end up blowing the entire $200,000 on dumb things. This is exactly how people lose their homes. Well guys, I hope that info was helpful. I actually fell for 4 out of 5 of these things that I just talked about. The only thing that I've never done was actually pull out money out of my house. And so I've never felt the need to do that. And if you're like me and you're paying extra payments into your mortgage, it doesn't make sense to pull that back out. So I've never actually done a cash out refinance, but I have fell for all the other items that I mentioned. If you're curious about the refinancing process, I have another video here that talks about everything that goes on during a refinance and everything you need to know. Make sure you check out that video. Well guys, if this video was helpful, don't forget to hit the like button down below. It helps my channel out greatly. If you like content like this and you like saving money, consider subscribing to my channel. Make sure you hit that notification bell so you're aware of new videos. If you have any questions, leave them down in the comments below. And as always guys, have a nice day.